Maybe, maybe some, maybe I could offer to take photos for someone, edit videos, or just sell handmade products like bracelets, even. But if you notice something about the examples I mentioned, there's something interesting. I wouldn't need any large amount of money to come up with that idea. You just need creativity, and that's what businesses are all about. Businesses often begin with identifying an opportunity and not with having a large amount of money. But here's the next question: where do we actually learn these skills? We spend years learning mathematics, but how many of us actually have been taught how taxes work, or how inflation can affect savings, or even what investing is, or how compound interest can grow wealth? Financial literacy is one of the most practical life skills, yet many students leave school without ever learning it. And because of that, we often rely on what we see at home or in our communities. And that's where different financial beliefs begin to develop. When financial education mainly comes from our surroundings, social expectations begin to shape how we think about money. For example, boys are often encouraged to think about earning, investing, and becoming financially independent, whereas girls are more often encouraged to save carefully or manage household expenses. Of course, this isn't true for every family, but many families encourage equality. But these stereotypes still exist in many parts of the society, and they influence confidence long before someone even opens their first bank account. The most important thing to remember is that these are learned experiences, not natural abilities. No one is born better at managing money because of their gender. This brings us to another interesting point. Many women become incredibly skilled at managing household finances. They know how to budget, compare prices, and even make every rupee count. Those are really valuable skills, but managing money isn't always the same as making financial decisions. Questions like should we invest, which insurance should we buy, or even which property should we purchase are sometimes left to someone else. Financial confidence isn't only about spending money, it's also about having the opportunity and confidence to make important financial decisions. One sentence that researchers and financial educators hear quite often is my husband handles all those investments. Now, I like everyone to imagine something. If something unexpected were to happen tomorrow, would you know where your family's insurance documents were? Would you know how to access those investments? Would you know who the nominees are? This isn't about mistrusting someone, it's about being informed. Every adult should understand their own financial situation because financial knowledge creates independence and security. Thankfully, media has also started challenging these stereotypes. Think about films like Dangal, Mary Kom, Chak De India, or Gunjan Saxena. On the surface, they're about sports or careers, but underneath, they're telling us something much bigger. They're challenging the idea that certain opportunities belong to only one gender. Many Bollywood movies challenge the traditional beliefs about what women can or cannot do. In Dangal, the daughters prove that the girls can become champion wrestlers even when society believes that wrestling is for boys. And in Chak De India, the women's hockey team shows that women can compete at the highest level and deserve the same respect as men, and much more as listed on the screen. Whether it's any one of those movies I mentioned before, they all have something in common. The characters succeed because of the qualities like confidence, hard work, determination, discipline, courage, resilience, and self belief. But notice what's not on the list. There's nothing here that says being a boy or being a girl. These qualities aren't determined by gender, they're developed through experience, learning, and perseverance. But what does this have to do with money? Financial confidence works in the same way. People aren't born knowing how to invest, negotiate a salary, or start a business. Those are skills that anyone can learn. When we stop thinking people like me don't do that and start thinking I can learn how to do that, that's when we start making different financial decisions. And once you believe you can learn those skills, the next question becomes what can I actually do with the skills I already have? And this is where financial confidence turns into action. So far, we've talked about changing the way we think about money. So now let's talk about putting those ideas into practice. Every person in this room already has skills. Maybe you enjoy cooking, maybe you stitch clothes, maybe you're creative, you make art, or you bake like me. But maybe you're even good at explaining concepts and tutoring others. These might seem like hobbies today, but they can also become sources of income. The most important thing is recognizing that value isn't only found in big companies or expensive ideas. It can start with the skills you already have. But simply having a skill is not enough. To turn that skill into a business, you need to understand some basic financial concepts. You need to know what you're selling, who you're selling to, who your customers are, how much you're earning, and how much you're spending. When you understand your money, even a small idea has the potential to grow into something much bigger. Let's take it one step further. There's a difference between earning money once and building a business that lasts. Imagine you bake cookies. Selling one batch will earn you some money, but building a business means asking questions like, who are my customers? How much does each cookie actually cost me to make? Am I charging enough to cover the cost of all my expenses, like all the ingredients? Am I making a profit off of them? How can I improve more and reach more customers? Those are questions entrepreneurs ask every day. Financial literacy isn't just about saving money, it's about making informed decisions that help an idea grow sustainably. Whether you want to become a doctor, engineer, artist, entrepreneur, or even work in a company, these skills will help you throughout your career. I'd like to end by returning to the question that we started with. Who taught you about money? Many of us inherited financial stories from our families, communities, and society. Some of those stories encouraged confidence, others created limits without us even realizing it. But inherited stories don't have to become permanent beliefs. We can question them, we can replace assumptions with knowledge, we can replace fear with confidence, and we can make financial decisions based on understanding rather than stereotypes. Because financial confidence isn't something you're born with, it's something you build through learning, experiences, and the choices you make. I hope today's session encourages you to think differently about money, recognize the value of your own skills, and feel confident taking charge of your own financial future. Thank you.
Thank you, Aisha. That was really important, and I'm glad you picked up this topic. Next up, we've got Amogh, Karthik, and Shreepranav, and they'll be talking to us about a different topic. So, after you guys, I'd love it if you would introduce yourselves and the project a bit more.
Hi guys, my name's Amogh. I'm in 11th and I'm from Bangalore. I study in United World. So our topic is going to be about online payments. So I think this topic is very important because it's not something that's very distant like in the future, but it's something that's happening all around us. So we'll be talking about UPI and payments.
Hi guys, my name is Shreepranav. I am in year 12. I study in Doha College and I'm interested in finance because I like, well, to see the reasons behind certain decisions, and it's most likely money.
Hi guys, my name is Karthik. I'm a grade 11 student in Bangalore. And I'm interested in finance. Yeah. Yeah, so before we start, I would like to ask everyone a question. When was like the last time you guys actually used cash for any transaction? You guys can unmute. Okay.
You guys can
Uh,
unmute or you can say it in chat.
yeah. Yeah, so we're just gonna be talking about like how the digital payments work and how we revolutionized and moved towards digital payments away from cash.
Sorry, one sec.
Yeah. You can go to the next slide. Okay, so the digital money revolution. So the definition of digital finance is using technology for financial services like online banking, mobile wallets, UPI transaction, and budgeting apps. Money, it makes managing money easier, faster, and more accessible. Right. So just an icebreaker here. So if you've used like any online payment in the last 24 hours or you bought something online in the past week, just raise your hand. Okay, that's nice. Yeah. You can go to the next slide. Okay, so common digital payments, right? Uh, so there's actually a few groups they fall into. So UPI apps like Google Pay, Phone Pay, Paytm, and these are the ones you use to pay to like the shopkeeper or any online payments. And then there's preloaded wallets like Amazon Pay, where you put money into the wallet and then you're allowed to use it. And then there's online payments, which you can transfer through your bank account. Okay, so why do we use online payments? So the main reason is convenience and speed. Anyone can pay any from anywhere in very less time. So digital payments have exploded here faster than anywhere else in the world, and it supports a cashless economy, less cash printing, easier to track, harder to lose. Basically, it just fits people. It just fits how people want it to live. Okay, so the Digital India Initiative. So a lot of this was pushed by the government through the Digital India Initiative. It's a program with one goal: turn India into a digitally empowered society, a proper knowledge economy. So that's things like getting internet to villages, making government services available online, and encouraging exactly the kind of digital payments we're talking about. It basically laid the ground for the boom we saw in those numbers. Yeah, next slide. Right. So now the evolution of online payments. So in 2004, the first few bank transfers were called NEFT and RTGS. And then in 2008, the NPCI was formed. These were like the backbone of digital payments. In 2010, the IMPS was formed, where you could transfer money instantly. In 2012, India's most common form of transaction, online RuPay, was formed. And in 2016, the government introduced UPI and demonetization, where they switched more towards online payments from cash. And today, India, there's more than 20 billion uh, transactions monthly, and it's the world's largest user of online payments. Right. Okay, so there's different types of online payment methods. So there's the bank-based methods like net banking and debit cards, mobile wallets like Paytm and PhonePe, UPI platforms like Beam and PhonePe, and then there's QR code scanning where you just scan your QR code to pay, and there's other options like prepaid gift cards and online gift cards.
So hi guys again. So you guys have learned about or Karthik has explained how UPI works, but I'm going to go a bit deeper. I'm going to explain why it works and what exactly it is. So let's start with UPI. So what is UPI? UPI's full form is the Unified Payment Interface, right? It's a technology that allows apps like Google Pay, Phone Pay, Paytm, and I'm sure a lot of us FamPay work. So think of UPI not as an actual app, but as an infrastructure that lets other apps run. Okay, so basically it links your bank account to your phone, letting you receive and send money immediately without having without having to exchange account numbers or IFSC codes, which you will for debit card, credit cards. So before UPI was introduced, before it was created, right? Transferring money meant usually just going to the neighbor's house or something and then giving them actual hard cash. But that takes a lot. Or if you had to give like a lot of money, you'd usually use bank checks, but it takes a lot of time as the bank needs to approve and then there's a transfer process, etc. So UPI has made this entire process, which can usually take like 2 hours, 3 hours, immediate. It lets you immediately send money from your account to someone else's account. So UPI is like the backbone of India. I promise you that in the next 20, 30 years, it's all only going to grow. It's not going to reduce by the number of users. Next slide. Next slide. Okay, so here, um, in the previous slide, you were able to see UPI apps, which recognize. We all recognize Phone Pay, Google Pay, Paytm, and way more. There's like thousands of apps that let you use UPI. So different companies have different apps, but they're all built on the same infrastructure, which is known as the UPI network. So this is what makes UPI so powerful. It doesn't matter which app you're using or which app the other person uses, because you all are using the same infrastructure and protocol, right? So you can send money regardless of which app the other person's using and you're using. Next slide. Okay, so mobile wallets are completely, or not completely, but slightly different from UPIs. Instead of linking your bank account to your wallet, yeah, sorry, instead of connecting your bank account to your actual phone, they preload money into a wallet. So it's very similar on how you normally carry cash in a physical wallet. So there's multiple reasons why we use this, but few good reasons are because it's hassle free, meaning you don't need to carry cash. You can just carry your phone. It's faster transfers. You can immediately send and receive money. It's safe and secure, meaning you can lock it using verification such as password, biometrics, which basically means fingerprints and other physical verification methods. And it's also just convenient overall. It's like instead of when you enter a bus, you need to search for like 50 rupees or like 20 rupees, right? Instead of doing that, you can just pay conveniently immediately, and there's no like prepaid recharges either. So one thing worth keeping in mind is that money sitting in a wallet typically isn't earning interest, right? The way you actually earn interest on an actual bank account. So it means that it's not meant to be a long-term place to park your money. So if you want a long-term place, then you don't use UPI, you use bank accounts because that's how you get interest, etc. Next slide. Okay, so this is another topic which is related to online payments, which is known as debit cards and credit cards. So debit cards and credit cards still remain very influential or major in digital finance, both online and in store. A few things worth knowing about them can be that card usage has been increasing alongside UPI such as FamPay, Google Pay. And these cards are protected by security features such as OTP or CVV code or something known as tokenization. Tokenization is very complicated, but a simple explanation of it is basically when you're transferring money, the last two numbers or like your actual card number is blacked it can't be seen by anyone, and then it's replaced with a digital token during your transaction. So this means that your details will never be exposed to anyone. So common networks include, common companies include Mastercard, Visa, and RuPay. RuPay is basically India's own domestic card network. So cards give you flexibility to pay both domestically and internationally, but UPI, I don't. Most UPIs don't let you do that. They only let you pay domestically, not internationally. So while UPI is definitely faster and simple for paying in short ranges, cards can still play a big role for larger purchases, online shopping from other countries, and if you travel abroad, then you're most likely going to use cards because they don't. Most countries don't have the concepts of UPI. Next slide. So, what is payment gateways? A payment gateway like UPI is an infrastructure that allows online transactions to be possible, right? So, when you basically enter your card or UPI details on a website, the payment gateway securely transmits this information between you and the actual business that you try to pay to, but you obviously need to have money in your bank. So you basically ask the bank, can you accept my a transaction? So it lets you go to the other person. So it's all like authorized. So it moves safely, and there's no scope of actually being hacked or losing money this way. So some well-known Indian payment gateways that you guys might know is it Razorpay, PayU, CCV Avenue, and anytime like you're redirected to a screen to enter a OTP or credit card, that means that when you get an OTP or credit card, means that an online payment gateway is working. It's working. Next slide. Okay. So QR code payments. So you've all seen QR codes. They're basically like black and white squares that that's everywhere in local shops, in big shops, everywhere. So it lets you just scan using your phone and pay. This is your UPI. It's a way of using UPI. So a QR code payment lets you pay by scanning a code with your phone's camera. It opens your UPI app. It auto fills like the seller's details, and all you need to do is tap the amount you want to send and like your authorization, which means like you're confirming that you want to send this. This can be done to, again, biometrics or passwords. So this has this is very convenient and easy. So it's everywhere. It's in street vendors, small shops, and even card machines. Next slide. So how does it work? How does everything work that I told you about? So basically, for UPI apps, you scan and pay. You point your camera at the QR code, and then the QR code will fetch the details of the shopkeeper's bank account, and then it's gonna tell you how much do you wanna pay and confirm payment. So this is just fast and convenient again. So next slide. So even though it's very convenient and it's very fast, there's still a lot of issues with digital payment and online payments. So digital payments aren't without drawbacks. So few challenges can be digital illiteracy. So not everyone might be comfortable with using these technologies, as they're not that as educated and might think it might not have the knowledge to do so, use it. Then there's also something called a cybersecurity concerns, which means like you can there's phishing links, there's hackers everywhere basically, and there's still even though the chances of you getting phished is very less, there are still challenges. Then there's connectivity issues. So in remote places where you don't get signals or internet, right? You cannot send money because UPI works based on internet. You cannot use UPI without having internet. And overspending, because digital it's so easy to use digital money and you don't understand like how much you're actually spending. Um, you usually overspend compared to when you have cash in your purse. So next slide. So
Hi, guys. The future of online payments in India. There are five key payment trends that are shaping the future of payments in India. One is buy now, pay later. Then there's e-commerce. Cash is no longer the priority. Digital wallets and open banking, and real-time payments. Buy now, pay later is a new concept which makes it easy to make um, small loans in order to buy everyday goods. E-commerce is a platform in which you can buy goods and services online and pay online. Cash is no longer the priority is a policy that encourages the safety and efficiency of online transactions, UPI, and other mobile-based payment options. Digital wallets and open banking make it easy for people to carry around money, large sums of money that would not necessarily be safe when carried around in cash. And digital payments, UPI, all that make it easy to make real-time payments using bank accounts, which otherwise would take hours or days to go through. What is de-influencing? De-influencing is the opposite of influencing. It encourages people to not buy unnecessary, overpriced, or harmful products. De-influencing is important because social media influencers promote products for profit. They do not necessarily care about their customer base or their viewers. They're only in it because they get a cut. De-influencing promotes critical thinking and mindful spending. For example, de-influencing would be you don't need the latest iPhone if your current phone works fine. Skip expensive skincare trends that might not suit your skin. Avoid fast fashion hauls that harm the environment. These are examples of de-influencing that ask consumers to be more mindful of their spending, which can benefit them as they save more money and can also benefit external factors such as the environment, as consumerism does a lot of harm for it. Advantages of online payments. Online payments are convenient. They can be done anytime, anywhere, with just an internet connection. Security is also better as they could use OTP, encryption, biometric verification, two-step verification, and a host of security features that make your payment safer. Efficiency. It's faster than cash or checks. Promotes financial inclusion. Online payments can reach rural and underserved populations, which banks may not be able to. A question for everyone here. Have you ever bought something because of an influencer and regretted it later? You guys can turn on your mics and tell. Okay.
Could you give an example of something that you might have purchased that you regretted later? Need not have been from an influence.
I purchased this expensive power bank that had all the ports, and then I realized that, well, I only needed a C port. I had no use for any of the other ports on it, so I could have just gotten a simpler or better power bank even in terms of capacity that just had C ports, and it would have been more useful for me. Instructions. Divide the students into groups of 3 to 4. Each group receives a fake digital wallet with 1,000 rupees. Groups can decide whether to spend or save based on scenarios. A viral TikTok video promotes a gadget for 700 rupees. Do you buy it? Your favorite influencer recommends an expensive hoodie. Do you purchase or find a cheaper alternative? You're invited to a friend's birthday party. Do you spend 500 rupees on a trendy gift or make something yourself? Spending decisions groups discuss and track their digital balance. How much money did you have left? Did you regret any spending choices? And how did social media influence your choices? You guys can share what you would do if you'd like.
Miss Mansi, go ahead.
So, like for the scenario cards, as like you said, viral TikTok reel promotes a gadget. So I won't buy it because it's oh,
Sorry, could you say that again?
sorry. Okay, so I will go for cheaper alternative. And for the third one, for the birthday gift party, I would make something for my friend with my hands because be it will be more personal to them or her, like whatever. It will be more personal than buying something and then giving it to them.
Yeah, that's right. And for the first one, would social media influence you towards buying that gadget, or
No, I won't buy it because until and unless I personally feel it's useful to me, I won't buy it just because social media influencer promoted that thing.
thank you. Okay, interactive activity. We just did this. Tips for digital spending. You can set a budget. Decide how much you can spend monthly on online purchases. And you can track your expenses. Use apps like Splitwise or Good Budget. You could also use Excel or something more traditional and enter your expenses to track your expenses. Wait before you buy. If you see something online, wait at least a day before you purchasing it. This allows you to think of alternatives, find better uses for your money, and really think through whether you absolutely need that thing. Identifying your needs and wants. Ask yourself, do I really need this? And be aware of fear of missing out. Don't buy just because everyone else is buying. This is important with social media as you may see many influencers and people posting with product that you can buy from online. However, it might not be useful for you. So you do not need that. Conclusion, call to action. Digital finances can make your life easier, but they can easily lead to overspending. De-influencing helps you make smart, mindful choices in a world full of online trends. It's not about how much money you have, but how wisely you use it. That's it. Thank you, guys.
Thank you for this session, Karthik, Shreepranav, and Amogh. Does anyone have any questions for them? No questions? All right. Then I think we'll end the session with that. Thank you so much for joining. Have a good day.
Thank you.
Thank you.
Thank you.
Thank you.